Welcome to the Future of Supply Chain, presented by Dynamo. Each episode, we sit down with leaders in the industry as we build the future of supply chain together. Let's get into the show. Here's our host, Santosh Sankar.
Hey, ladies and gents, welcome back to the Future of Supply Chain podcast. I'm your host, Santosh Sankar, and joining me today is Zach Strickland, Director of Freight Market Intelligence at Sonar and FreightWaves. Welcome, Zach. It's awesome to have you on.
Thank you so much for having me, Santosh. It's a pleasure to be here.
You know, we don't need to do kind of the whole FreightWaves Sonar thing because at this point, I think y'all are household names for a good chunk of our listeners. But what I am really curious about is what's the Zach Strickland story? How did you kind of end up being, involved in the wild world of trucks, freight, but looking at this industry through the lens of data?
Yeah, so it's a great question. I actually did one of these type of interviews for Dooner, or What the Truck Guy, a long time ago. It's probably due for, I bet it was a bit rough at the time. Now that I've been in FreightWaves for a little bit, I probably got a little bit better at it. But yeah, to start from the beginning, I actually started out in finance and banking way back in the early 2000s. And that didn't turn out to be the exact world that I wanted it to be. Craig gave me a call, Craig Fuller, our CEO and founder. Before he was FreightWaves, he was starting a division of expedited truckload at US Express, XD, where a lot of people, of course, I think a lot of the Access America guys, a lot of the modern day brokerages really kind of found their roots in this organizational structure, the pod structure, if you will. And so he calls me up. He's like, "Hey, man, you can make a ton of money tracking and tracing trucks." And I'm like, "Man, I'm not really a trucking guy." I grew up with Craig, so we had this back and forth, this healthy back and forth throughout high school about, man, I'm not really a logistics guy. That doesn't feel like the best industry for me. And man, within the first month, I was like, I got this all wrong. Booking expedited freight was exactly what I thought the financial sector would feel like to me. And, we were, tracking and tracing, booking freight. This was like the hot, item, the hot commodity type freight where people would call in from Best Buy and be like, "Man, I will send you a brand new TV if you just get this truck to the storefront by Thursday at 5 p.m. And I will, I'll give you a blank check almost to get it there," because it was people's jobs and livelihoods that were on the line. And, it was that kind of environment that I was like, okay, this is actually exactly the intensity I was looking for at the time. From there, I transitioned into LTL, less than truckload, after, living that broker style lifestyle for a little bit. I went into LTL, and that's where I got my introduction to data. Not that I wasn't already kind of a data centric type of person, being in the financial, space. I was already thinking numbers game, figure out how to trade stocks. I thought I was going to be the next, guy that broke the stock market at the time, as a lot of 20-something-year-old guys tend to be. But this guy named James Langley, industry veteran. Many people probably know who I'm talking about here. He was the COO of Dart for a while, has been to several places, including US Express. Of course, that's where I met him. And he introduced me to the glory that is database management and what was to become data engineering, or I guess now the foundations of data science. It was really in the infancy of when people were writing queries and, to get information out of their existing data warehouses and infrastructure, which were very rudimentary. You're talking green screens, tables, and, columns of data that just stacked up for decades with no real oversight. And so he was like, "Listen, this may not sound or look like the sexiest thing on the planet, but I tell you what, knowledge is power and you control it." And that kind of triggered me. He's like, the people that are going to ask you for this information and to know how to get to it, they're going to be the C-suite executive level teams. And it's going to be everybody. Everybody's eventually going to come to you. And This guy is my Nostradamus. He called everything exquisitely. He used to work at UPS and at JB Hunt, so he had industry experience, knew the infrastructure of how organizations worked. He had a psychology background at that, which I also have. So he was able to kind of relay to me this very sexy looking thing was actually like one of the most interesting overall to deal with and work with. And then as I found out, getting information into the right position in front of the right audience and in a timely manner was possibly one of the most valuable things in an organization imaginable.
Amazing. That's a fascinating story. And I think kind of continues the trend of our guests, because this is one of those staple questions, right? That I tend to ask is like, people want to know the person behind kind of the voice or the screen they're watching. Nobody really plans to be in the world of supply chain, but we all stumble into it one way or another. But with that being said, we're sitting in a really interesting period, right? This is the start of the year. We're staring down almost the entirety of the 12 months of 2025. Where's your head at? Kind of what predictions do you have for the freight industry and the trucking industry broadly for this year?
Yeah, I mean, I'm sure a lot of your audience and you, of course, know that the freight market has been in a downturn. Supply chain managers have had some struggles, obviously, with the maritime space being what it is. The international community after COVID has not been what it was before. Shipping hasn't become a certainty. Procurement strategies have changed. Inventory management strategies are still evolving right now as we speak to navigate some of this. The geopolitical infrastructure itself is really evolving and changing. You know, the Trump election is, I think, reintroduced another layer of like potential volatility into the supply chain managers' heads and transportation managers on the domestic side. They're starting to feel the pressure of some of this. This is largely, I was just talking about the upstream activity. Domestic transportation is largely a downstream activity from a lot of these global companies. And that's been very, very easy. It's been an easy game since 2022. They overordered a bunch of inventory at the end of 2021. It came all at once, led to this kind of glut of inventory. There were trucks sitting on the sides of the roads. There still are to an extent in a lot of places. And this oversupply of truckload capacity has really been the story of the domestic transportation market since that period of time. And we're starting to see, and Sonar, of course, we track the tender rejections, tender volumes, basically the request from a shipper to a carrier, and then the carrier's basically saying, yeah, I'll take it, or no, I won't. The more often that the carrier says, no, I'm not going to take it, that's a sign that they don't have availability because they don't like to turn down their customers. And they've been rejecting loads at about a 3 to 4% clip over the past 2 years. This Christmas, we just topped 10% for the first time in 2 years. And it's not going to sustain above 10%. So that's 1 out of every 10 loads got rejected around Christmas time. That has come back down. We've had a little bit of winter weather now, but it's still around 8%, which in January, from a demand side perspective, it's really not a very busy month. Shippers don't have a sense of urgency. We just had double Wednesdays on the holidays. I know that most companies they're kind of clunky coming out of the gates when that happens because you have this 2-week, manufacturers shut down their lines because it's just so inefficient to operate like that. And I think the feel that I have for this year is that we're going to continue to see the domestic market tighten. It's had some relief valves. In a way, like we've seen shippers really increase their savviness though over the last couple of years. COVID trained them on some new techniques and making sure that they can't just sit back and say, oh, a truck's going to show up every time I call. That they've learned that that's not true. They also have learned that their procurement is not as reliable as it was from 2010, to say 2019. The procurement strategies are really helping dictate some of that volatility in the market because they're having to order inventories faster than they would want to, or maybe they're increasing their lead times on those orders now. We've seen the maritime space show pretty big widening. They're trying to order stuff well in front. You've got tariff concerns. There's pull forward activity. You've had the Red Sea conflicts. You've had, now the tariffs obviously are the big story. The ILA strikes. We just averted one, thank goodness. But all of these, the Panama Canal last year also had a drought. Like there's so many like percolations. Like there's so much activity in supply chain management.
Uncertainty is the norm when you operate a supply chain.
Yeah, we really are. We really have entered a more dynamic world in 2020. I mean, and COVID helped exacerbate that. But I think we were already seeing some of that with, our over-reliance on China to produce. They're kind of our manufacturing sector, totally dislocated to Asia over the, in the 2000s. And we sat on that for so long. And I think that's what people kind of think, oh, it'll just go back. I think I had a conversation recently with somebody about explaining, and they were relatively new to supply chain management. They didn't know about the pre-COVID world as much. And I was like, listen, a lot of the shipping managers, the transportation managers, they grew up in a world where the post-recession world, 2010 to 2015, this was arguably the most stable economic environment that we've had in my lifetime, where things kind of just went up and to the right steadily. And that bled into the transportation space being a pretty seasonal, predictable model. It kind of lulled everybody into this false sense of security that like, oh, we're in kind of this circadian rhythm.
Yep.
And then we had 2016, where industrial, the energy market kind of collapsed. We had oil prices above $100 per barrel. Then they fell down, almost overnight to like 40. That type of activity, especially when the United States is becoming the world's largest producer of crude oil, and therefore the energy sector here is very strong in our economy, that trickles down into other things, economically speaking. Mm-hmm. And the connections of that are far too complex for a 20 to 30 minute conversation. But what happened after that was we had a little bit of a freight recession in 2016. Then we had this weird 2017 freight market boom. And then that was followed by a subsequent late 2018, early 2019 freight market recession again. And now we're going to these periods of these boom and bust cycles. And it's almost like it's a derivative of the economic instability and these procurement strategies and these investment strategies really being binary. And it's like all in and all out type strategies that are really driving what I think is manifesting in the transportation and supply chain environment as volatility.
So you mentioned the term freight recession here. Let's kind of jump into that. What are they? What are leading indicators of freight recessions from the data that you look at?
Yeah, so the primary stuff obviously the thing that everybody looks at is going to be rates. Any kind of spot rates in general, contract rates. We of course track them both pretty regularly. We have daily prints of all these things that I look at. Mm-hmm. So I'm a little bit more in the weeds. So I kind of, small movements to me are kind of big. But we have seen spot rates, falling is almost a definitive, over a longer stretch of time, not like coming out of July 4th, the week after. I'm talking about, I look at kind of these peaks over time, these seasonal peaks around Christmas, Memorial Day, Labor Day, July 4th, Christmas. If those are going up and to the right, we're not necessarily in a recession anymore. And they really haven't been going down. Like 2022, little part of 2023, spot rates and contract rates were both kind of paralleling each other, falling. And it wasn't necessarily a demand side data point that was driving this. That's what typically, I think economically, most people look at demand side indicators. We track that too. But what we found was that, demand fell from 2023 or 2021 into 2022 for transportation. But there was so much inventory buildup that they just held on to it. And they were really just trying to get rid of it. So they didn't bring anything in for a while. So that dropped demand in the near term. But then what we saw was that demand actually started growing last year. Late 2023 into 2024, we started to see this trickle up in tender volumes and some of the other demand side indicators. And these are trucking shipments that we're looking at. And they grow throughout the year. That's not what we tend to think of as a freight recession. But that's really more of a demand was rising under an abundance of supply. So even though rates were falling, it's because there was just so much overcapacity, oversupply,
Slap it up.
that operators didn't have enough demand to support the available amount of capacity. So therefore, when rates are falling, both contract and spot, I consider that to be a recessionary state of being. And Craig came out in November and basically said, this is the end of, I'm calling the end of the freight recession. And I arguably would have said the freight recession was over months ago because we were seeing spot rate growth. We were seeing contract rates stabilize and not falling as much over long stretches of time, mind you. And it looked like the natural bleed off of capacity. And I've never seen a freight market cycle like in this granular detail before. I think, I mentioned the 2016 and 17 markets. Most people in that, and I was one of them. I was in the space at that time. I was a financial analyst, also pricing freight for LTL. And we had a record June revenue month at that period of time. And then we had this huge October after Harvey hit. And everybody was so quick to say, well, it's produce season that blew apart the market in June. And then it was Hurricane Harvey that really disrupted the freight market in September and into October. Then it was ELDs. And I was like, that's wild, man. Like that's crazy that these singular events can get all the credit for triggering things.
How long have historically freight recessions lasted? Because our most recent one's the longest on record, if I recall correctly.
Yeah, and that's the nuance of these last two cycles. The up cycle in COVID was 18 months, and the down cycle has been arguably over 24 months. Those are historically long periods, and the downs are almost 1.5x, almost always 1.5x of the ups at minimum. So an 18-month cycle.
That's just the way the world goes, right? The bad stuff is always longer and worse than the good stuff.
Yeah, and this quick reaction nature that we have. But typical before COVID, the recessionary periods were about 9 to 12 months. And you had these, 6-month upswings generally. 2017 was one of the longest ones in historical since I've been monitoring it. But it was really, that boom was actually a product of a recession, whereas what we're feeling today is a product of a boom.
Yeah.
And, if we had tender data and back in 2016, I probably would not be at FreightWaves because I would have been able to salvage my company from making pretty bad decisions during a down cycle.
Sure.
That we would have seen clearly and plainly and right in front of us. Now that we can monitor it on the daily and on the weekly basis, we can see recessions ending before everyone else can. Like I was saying, Harvey and all the produce season booms, those were actually just demand shocks in an environment that was ready to be shocked. It was like a volcano building up magma underneath the cone, ready to erupt. And all it took was like the straw that breaking the camel's back. So that's actually something that I'm looking for in 2025 is what's going to be that big moment that gets the headline for the freight turn,
Yeah. And before we kind of progress from this part of our conversation, for folks who aren't as familiar in the nuance of the freight markets, how should they think about the relationship of the freight economy with the more macro environment that, they'll turn on CNBC or Bloomberg, whatever, and hear about?
Yeah, that's a great nuance. So the freight economy is obviously driven more by goods and physical demand of things and items. And our national economy is a service economy. 70% of the GDP is related to services, travel, food services, professional business services, technology services like you and I are in, and then things like that. So that's what drives most of the GDP figures. So when the economy is booming, sometimes the freight market, the freight economy is actually going down because it's not service oriented. It is a service, but it needs the goods to be ordered and move fluidly through. So it's got its own supply demand curve, and it sits over here on, kind of a corner of the gross GDP. And, former economist of ours, Anthony Smith, one of my good friends, used to lay out the RGDPG, which is the growth or the goods economy growth. That's the figure to look at when you're looking at transportation demand.
And so you just mentioned a few moments ago, Craig came out late last year kind of calling the end of this freight recession. You'd actually observed some data earlier in the year that gave you perspective that it could have even ended sooner. But now, as we come into this year, you're looking for a demand shock. Where might that come from? Is it kind of our friends south of the border in Mexico? Is it going to be a pre-tariff kind of inventory buildup? Is there any sense, or are there kind of adjacent data sets that might be leaving some breadcrumbs for those of us hoping for smoother roads ahead?
So I think, demand gets all the headlines and the pub and cred because it's the easiest thing to understand. Demand may be the one thing that I am the least bullish on in 2025 outside of a Trump economy stimulus. He loves to stimulate the economy. He did it in 2016 and 17, which is honestly one of the things that fueled that freight recovery environment. But it was a bubble. It was a very quick hit bubble, and that's why it wasn't sustained. That's not a healthy thing for the economy to have these quick hits. Everybody gets excited and they like them. I love them because they make it interesting, but they're almost always followed by a pretty sharp down.
Long-term bad, short-term good, long-term bad.
Oh yeah, you can make an economy as a drug addict to stimulus. If you get it hooked on it, you can't end it. You have to have a down period to kind of clean out the unhealthy portion of it. And that's the one thing that I can't really see on the horizon clearly in 2025. But the good news to that is that nobody's ever predicted one. They've never seen a Hurricane Harvey. They've never seen a produce season, boom like we saw in 2017 coming. Those are exogenous events. COVID, very unique. I don't know if you can call it black swan.
Yeah, oftentimes.
And it's a hard thing to predict. But I think the one thing you can lean on is that the likelihood of it occurring is becoming greater. And even if demand doesn't perform as strongly, which it actually is starting off a little slower from our data's perspective, it looks like intermodal growth has kind of taken on, the service issues on the rail that were persistent during COVID that kind of pushed shippers away from that space. They've gained a lot of that share back, if not more. So that's tamping down the truckload sector. You've got Mexico getting some of the headlines here, especially with some of the tariff stuff going on, but Trump's not really clear on what he's going to do with that. And you've got an automotive.
What's the data say right now about kind of cross-border?
It's not as active as everybody probably would imagine it is. It's actually slowed down a little bit. And I think that's because of the automotive sector's weakness right now. We've had the EV investment in EV that has really faltered here recently. And Mexico there's more commodities than just automotive parts and things like that, manufacturing, but it is a big portion of what crosses that border. And that's not, and Mexico has got its own set of chaos down there. We've seen increased violence in truck theft down there over the last year. I think the numbers are a 9% growth in truckload theft. And that's while it's in transit. That's not like it's parked. And 83% of them are violent. So that market down there, if we see demand return, is going to be that's a wild west, man. They just cut off the duty free $800 rule. The president down there did that almost overnight.
Yep.
But that's also keeping things.
It's ravished a lot of kind of 3PL or rather shippers that leverage certain 3PLs.
Yeah.
Because of that benefit.
Yeah, and so that environment, like we look at outbound Laredo as kind of the bellwether of that cross-border traffic, because Mexico is really chaos. Like you look at Mexican data and it shows you everything. And really what I look at in Mexico is the volatility. Does it increase or decrease? And we've actually, over the last half of the year in 2024, we saw the volatility kind of shrink a little bit. That doesn't mean that it was an easy ride down there. It just means less potential, probably disruption going on. In Laredo market really didn't, it's actually the tender rejection rates in Laredo right now below the national average. We've got a little bit of percolation around the holidays, but I do think it's coming, just not yet. And it may be, it may need some clarification from the administration to get there.
Let's shift gears. You're an LTL guy. I guess maybe even at heart. What's going on in the LTL market? What type of data are you looking at? What is it telling you? Are there any calls you're comfortable enough to make kind of as you stare down 2025 looking through this lens?
Yeah, LTL, of course, my bread and butter. We actually do have a new data set of LTL that we're about to fully release here in a couple of weeks. We've had some snags there. We announced it at our F3 conference in Chattanooga here in November, but we've had to delay that release by a month and a half just because of where we're getting some of the data. Is they had to clear up some legal issues. That's oncoming. But what it does is we basically have $2 billion of shipment data from LTL, and it allows me to see pricing trends as they're occurring on the daily basis. And the interesting part of the LTL space is that they basically escaped the deepest cuts of the freight recession because Yellow basically gave them an out. And then you had Estes have, the hack issue back in October of last year, October last year. It really created enough, destabilization in that space to give them a pass on some of the hardest downward trends. Because typically what happens is the truckload market moves, the LTL follows by about 6 to 8 months. And since Yellow exited in the middle of all that, third largest national carrier,
there was a ton of capacity that exited the market. Yeah.
Yeah. You had this, basically this freight got pushed out of Yellow's network and had to get ingested into others. And that created an environment for rate increases in the middle of a freight recession for the LTL market. And that has largely cleared out. So now we're starting to see rates. They were still increasing earlier in the year, but not by the same clip. And now they're starting, it looks like they might have maybe for a minute fallen down. Now they're starting to push back up again, just by a skosh. So I would call it kind of a flat year over year situation for the LTL space, but it looks like there's, it likes to follow truckload. And I think the narrative that truckload's turning has kind of helped them sustain rates. Also, they're just less served. I mean, national LTL carriers are not, you don't see the volatility in LTL like you do in truckload because there's less of them. And some of the high level operators like Old Dominion can really control the pricing there because they have their operation just nailed down.
Kind of amazing at what they do. But I was also going to add, and some of our listeners have heard from the Roadrunner guys last year, it's a much more algorithmic approach to pricing freight. And because of that, one can avoid some of the animal spirits that drive the ups and downs in the truckload world.
Pricing discipline is definitely better in LTL naturally than truckload. But I think that with the disruptions, and since a lot of shippers that I talk to, they're not as concerned about the LTL because obviously it's a smaller portion of their spend, but they tend to not really pay attention to that as fully as the truckload side. So therefore, they're more open to kind of letting those rates stick around. Yeah, and not really aggressively targeting costs as much in that space because they do understand that it is a much more complicated, environment. You've got a network. You can't just buy a truck and start hauling LTL.
That's right.
You have to open an area, and you better have customers like right away. So you can't just open up overnight and expect to participate there.
Well, Zach, we've had a great conversation. I'm going to bring us home here with a bit of what I call this or that. I'm going to give you 3 sets of options, and I want you to pick one of these options in 10 seconds explain why. You ready?
Mm-hmm.
Trucks or trains?
Trains.
Why?
Well, trains because I think I like from my perspective, I like trains better. Like from riding on them, and I wish America had more trains. Honestly, especially from the passenger component. Having been to Europe and understanding how trains operate there, it's a much more stable environment. Now, if I'm shipping, I don't know that I would feel the same way. The truck is definitely more flexible and gets me where I want to go more often. But the train, I love the sophistication and the precision of a train and railroad operating network because it does have a very static infrastructure. It's not something that I want to read about in terms of like what's happening in the train market. And I kind of respect that right now because it's kind of like a backbone mechanism.
Mm-hmm. Next up, Mexico or Canada?
I should have said this because I would answer these questions the exact same way, having heard that one. I will pick trucks for headlines and fun and enjoyment, and I'll pick trains for my reliable, like, this is what I want. And I'll pick Mexico for the fun and interesting chaos that it produces if I'm watching a thing. But if I'm leaning on an operation and needing something to produce, I'm leaning on Canada because Canada's got their sophistication down, their operational infrastructure very well set. It's kind of like the quarterback in the NFL that just operates with pure efficiency. Canada has that. Mexico, that's like the Brett Favre. I'm watching Brett Favre. I'm watching Aaron Rodgers in the later part of his career, just seeing what kind of, because I don't know what's going to happen next.
Diesel or electric?
Diesel. I think electric's overhyped, especially in a market that doesn't have an infrastructure for it yet. The electric, I think, obviously is going to be a future state of things. But right now, I got to pick diesel because the infrastructure exists. It's reliable. Having driven an electric vehicle, I love them. Like, I'm ready for it, but we need the infrastructure to show up before we get too excited about it.
Amazing. With that, Zach, thank you so much for indulging us from your vantage point, a very data-heavy vantage point at that. And let's see what 2025 brings us all in the world of freight.
Yeah, let's do it.
Cheers.
Cheers.
Thanks for watching. Follow us at dynamo.vc for all the latest episodes. We'll see you next time.